So today, let me give you the cheat sheet, the rundown of how I go about trading the future markets, okay? And we're going to talk about one of the most important concepts, which is market structure as well. Now, I was able to reach my goal. I know each and every one of us are achieving, or not achieving, or thriving, or wanting to reach a certain level on a daily basis. Maybe it's making $500 a day, making $250 a day, maybe some making $5,000 a day. But that all comes with experience. It all comes with the amount of capital that you actually have to trade the future markets with. But the key to success when it comes to really making it within this business, no matter what you actually trade, because there's a variety of different markets to trade within the futures. You have commodities, you have grains, you have meats, which those are commodities in a sense. You have the indice markets, currencies, financials. So there are a list of instruments that can be traded or contracts that can be traded within these markets. Now, the thing you need to honestly master, and I don't know how to really, I kind of beat this to death. I kind of harp at it so much. Market structure. If you are not taking your trades into the direction of a higher base chart in the same direction, then you're counter trend trading. Do those trades tend to work out? Nowhere as great as taking trades with the market direction. I mean, when the market is trending in a certain direction. The way I trade is using a higher base chart and then, scaling down to a lower base chart. All right. I love to have that confluence where I can mark up a higher base zone, whether it's supply or demand, and do the same where I can find a scale down approach or a smaller zone within the larger zone of supply or demand as well. Now, the cheat sheet is like this. Look at your charts. Okay. First, find a higher base chart, one that you may use on a daily basis. Maybe for those that trade time-based charts, maybe a 1 hour chart, and then maybe you're scaling down to a 5-minute chart. Now, I trade range-based charts. So on the NASDAQ, I'm primarily looking at the 120 range as my go-to chart to try to figure out the market direction, or at least form a bias of which way the market is trending. Okay, so just like today, for example, and let's go a little bit further back, because the market was very volatile. All right, so if we look at what the market's was doing, we were making higher highs and higher lows up through yesterday's trading session, meaning the overnight session, when the market was, as it was opening and making its approach into today's trading session, which is April the 7th. We were making these higher highs and higher lows. So we were bullish to the upside. The market pulls back. This is a major high here. There's a major low right here. The market pushes higher. As it's making these higher highs and higher lows, this was the period in which the market was very volatile coming into the opening of the New York session. It started pushing really fast to the upside, okay? And then we got these nice pullbacks. When you see the market breaking structure lower, and I'll show that trend reversal pattern so many times in this channel, so please do yourself the biggest favor, guys. I know a lot of you have questions, especially beginners. Watch the video content starting from right now and going back. It will answer a lot of your questions or questions that you may have. When the market is making a trend change or is shifting from one direction to the next, like coming to the downside, you're going to see where it's making lows, lower highs, and lower lows, breaking structure to the left-hand side. This is a reversal right here coming back to the downside, okay? Back to the downside. Now, it doesn't matter if it's minor structure or major structure coming back down. When you get that pattern when the market's making a low, a lower high, breaking structure lower, where it's first made the first lower highs, say for example, and then it takes out a low here, and then let's say it runs a low to the opposite side or to the left of the chart, the market is shifting its direction, and it continues doing that as it's making lower lows and lower highs to the downside, right? That's why I had this area here marked up as a key area of supply to take a trade from. This was a beautiful area. The market had not turned back around and started pushing to the upside. Made a low, lower high, low, lower high, lows coming to the downside, breaking structure right here. This is a high probability supply zone to look for an opportunity to go short off of, okay? Just marked it up because it is a supply area. There was also a supply area resting back up in here, but when we start to retrace back to that area and it reached that zone there, we were already kind of shifting back to the upside from a bearish standpoint back to a bullish standpoint here, as you can see. Okay, and the market can change direction at any given time. You must understand that. So as it was retracing back, you can see it was making higher highs, higher lows, higher highs, higher lows, pushing to the upside, taking out structure over here to the left-hand side of the chart as well. And then we got a pullback to a key area of demand right here. Okay, this was a demand zone. The market wick right below that, right? That's a liquidity sweep. This, anytime the market takes out a low by sweeping below it with a wick of a candle, that is what's classified as a sweep or a liquidity sweep below it, okay? So it sweeps right below that, and then it pushes back to the upside, taking out a high here, a break of structure back to the upside. Now, this is where the market starts pushing back to the downside. This is a major low right here. I talked about, major lows and major highs. This is a major high right here. When the market started making higher highs and higher lows to the upside and taking out structure to the left-hand side of the chart, this became a major low. When it pushed up and made its final point of its basic destination where it stopped at before turning back around, it started making lower lows and lower highs, taking out structure as it came to the downside. Lows, lower highs, lows coming on down, and it slightly broke below this major low right here. So that's a break of structure right there. That is a break of structure. That's why when the market pulled back right here, as you can see right here, this was a supply zone. Let me blow it up for you guys real quick. Now, it's low probability. Let me make sure though. Kind of stretch it out some. Yeah, that's low probability right there. But it is a supply zone, and the market comes up and reacts off of it, okay? Why does it react right there and come back down? Because it has gaps on these candles to fill back to the downside. Voids, imbalances within the market has to fill those areas in. So, again, this was a break of structure down to the downside. I'm giving you this because this is like a cheat sheet in which you really need to be able to identify, and it's clearly been able to grasp structure of the market. Anytime the market shifts structure or takes out a major low or major high, so right here, it shifted structure back to the upside, okay? So we went from bearish back to bullish, okay? Now back to bearish. So if we were back to bearish, we need to be looking for pullbacks to key areas of supply, all right? So that's why it reacted right here. The market came up. It also reacted at this area here where I have this line marked up. Let's see this right quick. That red line, let's make sure. Yeah, that's a supply zone right there. I was just trying to see, did it tap it? Yes, it is. It's a high probability supply zone right there, but be mindful of what's resting below you. I always say this. There are areas of demand. That's why the market got there, kind of reacted there. There's demand there. There's demand here. So you have to understand when the market was making these higher highs and higher lows, it was, yes, going up and testing a supply area for sure, but the change in the direction of the market was, bullish at this point because we were making higher highs and higher lows. Remember that pattern, guys. And if you're a beginner trader, I'll talk about this on the channel here, where it's making these lower lows and lower highs to the downside. Okay, all right, but then it shifts, making its first high, higher low, and then breaking structure to the upside, taking out, maybe there's a structure area here, minor structure, but the thing that clearly identifies this is where it's making a higher low first, and then it makes a new high, and it's taking out structure over here. This is a reversal back to the upside here. You have to understand that, okay? So when the market was making these higher highs and higher lows to the upside, I personally was only looking for pullbacks to go long up until what? Until the market shifts to where it's made a last approach of a high, a low, a lower high, okay? This is the most important part of it all right here in a sense, because now it's not taking out the most recent or previous high, but it's made a lower high right here. Now coming down, breaking structure here. So we have broken structure below here and below here with a lower high being formed. So now we're back to being bearish, okay? Now, yes, it does tap this demand zone, but you got to understand structure just shifted from bullish to bearish now with the market breaking structure and coming off this lower high. You've got to be able to read the market direction. You have to be able to read that to get the direction right. So, because if you go long right here, Can you pick or scalp something up here? Yeah, this was a demand zone. Was it counter trend to the direction of the market and looking at what was going on? Yes, it is in a sense, because now we've made a low, lower high, and breaking structure lower. We tapped this demand zone. This is counter trend. You can look for a quick scalp, but you got to understand it's going to be quick, maybe short lived, because now the market is shifting, coming back down. And that's what it does. It reacts there, and then it comes and pushes a little bit lower before pushing back to the upside and shifting again. Just understanding the flow that the market is making, you have to be able to read that. Bullish, come back down, bearish, back up bullish, coming down, slight breaker structure. But from here, we're kind of bullish back as we push to the upside. You can see this clearly with a channel, if you can kind of envision this. This is a channel up to the upside here is creating, okay? This is a major high. It took it out. Yeah, it did take it out right here at around about 2 o'clock this afternoon. It took it out. Now, if we look at the market right now, I'm gonna remove this channel to the downside. Yeah, now we've broken, structure back to the upside here. As you can see, we're taking out. We just made a structure break to the upside, taking out this high right here. So, yeah, it could pull back and test some area of demand. That's what it did right here, coming to the downside right here. It tested this area of demand and pushed back up. But now it's coming down and it's breaking below this area right here. Okay, you see that right there? So we made high, higher, low, high. Now it's coming down and it's breaking structure below this area here. So maybe it's going to shift to the downside now. Maybe we'll start making lower lows and lower highs coming back down to the downside. You've got to be able to see the flips and understand the shifts within the market to take your trades in the direction of the market. So like this is Friday's price action. I think I talked about this the day before or yesterday. You can see the market clearly making lows, lower highs, coming down, breaking structure, a new low, lower highs, okay, coming down, breaking more structure below this area here. That's why this is a beautiful area of supply resting back here that it tapped into. That blue box right there, okay, we just had a major breaker structure right here. A markup on 120 range supply zone right here. That yellow box I have drawn up right there, that is the lower base 24 range chart zone that's on the inside. I trade using confluence because you need to have means of confluence wherever you're trading at. Here I have my first zone that I marked up, breaker structure coming from this area here. Give me 1 second, my chart kind of froze up. Sorry about that. Okay, here we go. Low, lower, high, and then broke lower right here. Pulls back, mark the first supply zone up, okay? Then find or scale down to a lower base chart. Like for me, I'm taking my trades from a 24 range chart. After I marked up my higher base chart, scaling down to my lower base chart, and looking for a supply zone on the inside of the larger zone that I marked up, okay, from the 120 range chart. Not only that, but I also have confluence with that 17,750 half number as well. That's why the market reacted right here very, very nicely as it from the supply zone. Then it makes a high, higher low, first higher low back to the upside, breaking structure when it broke up here to the upside, pulling back, minor structure break to the upside, taking out this structure area over here as well. Pull back, this is a key area of demand. Two zones, mark up the higher base zone first. This was 120 and a 60 range markup. So again, demand zone markup off the higher base, scale down to a lower base chart to find another zone to give you confluence at this area. Plus you have the 17,800 round number. Okay, so that was 3 means of confluence right there. All we're trying to depict is get the direction of the market right. And once you have that right, then that's going to help you determine which way you need to be looking for your setups, your trades, right? Either the supply or demand. If we're breaking structure lower, only supply setups. We're breaking structure higher, only demand setups. Please try to stay away from counter trend trading against the overall direction unless you have experience. Because if you counter trend trade, what that means is that you're going against the higher base charts. So if the market, let's say the market is bearish, and let's say this. Let's say the market, for example, is let's say it's bearish to the downside, right? Okay, bearish to the downside, and then it starts to push back to the upside, right? Yeah, you may have a demand zone resting below, okay, but the overall direction of the market is bearish. So you should be looking for supply versus demand setups, because if it's bearish and then you see a demand setup, okay, and you take a pullback, then it taps it and you go long. Well, guess what? You are trading in, you're counter trend trading in a bearish market, okay, a bearish market. So please try to stay away from counter trend trading, because those trades could not always work out, and when they do work out, they could be, you know, short-lived. So just wanted to mention that. But there's tons and tons of video content here on this channel that where I break down things and walk you through a variety of different, you know, concepts in the strategy itself. But structure is extremely important if you want to be on the right side of a trade. But that's all really I want to talk about today. I mean, as you can see, I mean, I took a trade on the ES1. I took another trade on the NASDAQ, and my last entry was on on gold. So I took 3 setups today. Beautiful trades. Yes, trading the NASDAQ was, you know, I had to wait for a better opportunity because the volatility was just out of this world today on that market. Not, you know, I know there's a number of factors or things that are being discussed and talked about when it comes to the media and the economy and things like that. But, you know, you have to be safe out here and be very careful when trading these things. But this is just a little bit of, you know, just a cheat sheet or a cheat code to try to point out to you that the overall major importance of trading is all surrounded getting the structure of the market correct. And once you do that, you're on the right side. Okay. Now, if anyone wants to become an elite channel supporter or elite channel member, the same thing. The link is down below. I think it's titled Elite Channel Supporter, if I'm not mistaken. Either way, there is 2 links. The first one is the Discord. Okay, it's free to join, so come join us if you want to. The second one is the Elite Channel Supporter group. The second link in the description. Once you click on that, there's going to be 2 tiers that pop up. Make sure to choose the second tier for $6.99. What do you receive, right? You receive all the trade breakdown videos. There are tons of them on there. This is where I walk you through setup after setup after setup on trades that I've taken and posted over our Discord community so that you can grasp an understanding of why I took the trade for one, what the structure looked like, where to place your stop loss, where to place your profit target, so you can back test and forward test to find these similar type setups yourself, but also know what you're looking at when you're trading. Okay, again, it's only $6.99. You also receive the video playlist and a great video that I cover surrounding market structure if you're struggling with that concept as well. $6.99 a month is all it is. That's like 24 to 25 cents on the day. That's it. Okay. Outside of that, if you're not a current subscriber, please take the time to go ahead and sub by clicking on the subscribe button. Make sure to turn your post notifications on so that you do not miss any of the uploaded videos that I drop here on YouTube. But outside of that, that's all I have. If you do me the biggest favor right now and go ahead and click that thumbs up button, that like button, if you have not done so, I greatly appreciate it. Take care. I'll see everyone in the next video.